Welcome back to EDS, and in this video we're going to take a look at how you can write your own options contracts, collect a premium upfront and generate consistent returns year on year. It is a Sunday right now, the markets are closed, but we're just going to speed run a mock position and show you what it would look like. So let me just re-enter in my password for whatever reason, and cool. So first thing we want to do is just open up some underlying. Any underlying is fine. Not that it makes any difference at all. Everything seems to be going up recently. We have just had the US elections. So that's nice to see. And we just want to pull up a list of expirations here. So we've got a list of expirations to choose from, and we want to pick a monthly expiration that's between 30 and 60 days out in time. The only one that fits that criteria is December 20th, and that's 40 days away. So this is the information that we came here to collect. December 20th, 40 days away. Now we come over to our watch list and we use that information to filter out anything that has earnings over the next 40 days. Your brokerage platform might be slightly different, it might not have this feature, but basically what you want to do is you want to make sure that any underlying you choose to put a trade on is not going to have earnings over its lifespan, unless if you're making an earnings play specifically. But I'm assuming that your entire portfolio isn't going to be made up of earnings plays. So your bread and butter, make sure there's no earnings. And also you want to filter out anything that has a low liquidity level. And you'll be good to go. So if you're just coming back into our watch list, Tesla, we had a look at Tesla the other day. We had a look at SMCI the other day. Let's have a look at DJT. Why not? It's been doing some interesting stuff due to the elections. We've got an IV level of basically 200%, which is insane. And the IV rank is 54.8 with an IV level of 200%, which is, I don't know which one is more crazy, but that's insane. And it's currently trading at about just under $32. So let's have a look at DJT and let's see if we can make some money. So this is the options chain here, and we simply want to sell one call and one put as we always do, and we want to sell them anywhere between 15 and 20 delta. Because IV is so high, I would be tempted to go a little bit heavy on the delta, 21 delta on the put side, and there's a 21 delta on the 21 delta on the call side, 21 delta on the put side. That gives us an overall negative 0.81 delta on the overall position. And as we can see here, we've got a 65% probability of profit, 76% 76% chance of hitting 50% of max profit over the next 40 days, and we would collect $530 up front, and our broker is going to require just under $2,000 to open this position. So we're looking at about a 25% return, a little bit higher than 25% return, to be exact, which is very, very good for a naked position. Now, if you did want to increase your probability of success, by all means, you can just widen out your strikes a little bit. So we've reduced our deltas. We're on a 16 delta on that side and a 15 delta on that side. You will collect less premium up front. The broker will require slightly less buying power from you, but you will enjoy higher probabilities of success. Now, you can also buy another contract, say $5 wide on either side to cover your shorts, and that will further increase your return on capital. We now have a max loss. Before it was unlimited. Now it's defined because we've bought along to cover our short. Our broker knows this, and so our max loss has been defined, and our buying power is limited to only what the max loss is. So that is how you can find positions, manipulate positions to fit inside any size portfolio. And if you're unsure of how much buying power you should be allocating to any given position, click the link in the description and then click on free position sizing template. It will take you to the spreadsheet. You just fill in the information in these two boxes here, and everything will then be calculated for you. As long as you follow this, you'll be absolutely fine. And if you want to learn in more detail, click the link in the description, click on EDS Premium, and then get yourself signed up. You'll have access to our portfolios once you're inside, so you'll be able to see the positions that we're placing, how we're managing risk, how we are making adjustments, and you can simply just copy us, or you can use it as inspiration or use it as a learning tool to see how you can apply those same techniques and mechanics into your own portfolio. There's a full course. If you don't know what you're doing, we will teach you everything. No prior knowledge is required. It's a private community as well, so you can speak with other like-minded individuals and with myself directly if you get stuck at any point, or if you just want to speak to people about it because you have a passion for it. um, that's also absolutely fine. There's a 100% money back guarantee. So once you've studied our full course and followed some of our trades, as 6 months has gone by and you still don't know what you're doing, or you haven't been profitable, then we will work with you for free until you do become profitable, or you can request a full refund. So it's completely risk-free on your part. We do aim to get you completely trained up within 6 to 12 months, and at that point, by all means, if you want to stay inside EDS Premium, that's fine. But after 6 to 12 months, you should know what you're doing at that point, and you should be completely self-sufficient, and you wouldn't need any external help. So it is £1 a month to join right now. The price will be increasing. However, once you're in, you're in. The price is locked in, so you don't need to worry about it. You are rewarded for getting in early. And so with that being said, I will see you guys on the inside.